If you want to trade something real, watch this video. First off, read this disclaimer carefully. We will look at lean hogs futures, and we will look at a live stock ETN. In the ETN, you get exposure to both lean hogs and cows. First off, let's look at lean hogs futures. HE is the ticker, weekly data points, and we go all the way back here to 1988. Something that's quite apparent is the recent price crash. We went to lows that we haven't seen since 2002. The reason why we have seen such a massive crash, that is due to demand issues because of the virus situation. The thing is, when you see these kinds of moves, you can start to speculate. Well, maybe this is a very interesting opportunity. It has never been this low. Is all the bad news priced in to lean hogs at this point? Of course, it is very hard to know for sure, but here a lot of bad news is priced in, substantially more bad news than what is priced in here. So the psychology of the traders here vis-a-vis here is drastically different. One of the things that's very apparent with the chart is that this is a very erratic market. It moves in cycles very actively. That's also beneficial from a swing trading perspective. If you look at this rising cycle, 58%, the declining cycle here was a whopping 51% shorting opportunity. Just this one alone, almost 30% pullback. It is also apparent here that these futures respond relatively nicely to moving averages. Here the red 200 week is a resistance level, resistance, here as well. We are currently below almost all the moving averages except the blue 5-week moving average. This week we are seeing a rather interesting bounce here. You can see that we reached a deep low here last week. This week we went down to test, but then we found some buyers. Is this the low? Tough to know, but this is certainly a much more interesting opportunity than this. Let's look at the daily data. Well, let's look at the correlations. There is a minus 10% negative correlation between lean hogs and the S&P 500. Let's look at. Let's actually look at the correlation. Let's look at the correlation with cow, which is the ETN. That's the iPath Series B Bloomberg Live Stock Subindex. We do not get any correlations here on the weeklies, but on the dailies we do have an 81% positive correlation. Looking at these moving averages, we see that we are below the longer term moving averages, the 50, 100 and the 200 day, but the 5 and the 10 day have now become positive. That's pretty good. This is a very interesting move. The bulls have made some progress. You can see here that the buying started when we got oversold, and that's another interesting observation. These futures respond also relatively nicely here to the RSI. So not just moving averages, also RSI. That's very nice to know. Yeah, this is definitely very interesting. It is super speculative. Futures are a very complicated product, so that is why we look at the ETN, which is an easier alternative. Let's change the correlations a bit to get it with the SPY. like that. We do not get any correlations here, but we will get it on the dailies. But here on the weeklies, this contains both the hogs and the cattle. You can see that we've seen this massive pullback here as well. Let's measure the sell-off from this. Let's take the intra-week high to this intra-week low. That's minus 52%. We've seen a bigger loss on the lean hogs futures. But here again, we have seen 3 weeks of buying. We have a resistance here at the blue 5-week moving average. So it's been negative and resistance throughout. But it is interesting to see that even intra-week, this, if you look at the lower wick here, it doesn't go that far down than this week. So this week here is previous week, that is, was a little bit higher. There is some progress. Is this a screaming buying opportunity? No, this is obviously rather bearish. But from a contrarian perspective, you got to ask yourself, with also this deep RSI, 25 or oversold, is all the bad news priced into this product? Looking at the daily data points, we see that the 20-day moving average here in purple has been a resistance level. Here, surgical test fail. This is another test. A breakout above that moving average would be very interesting. Yeah, so obviously this is very early and not a screaming buy, highly speculative, but very interesting. The saying is buy low and sell high. Looking at Sachs, they have a number 5 strong sell rating for this ETN, so they are not feeling bullish. Going here to ETF.com, you can see that it contains lean hogs and live cattle future contracts. This differs from our benchmark, which incorporates all 3 of livestock contracts: lean hogs, live cattle, and feeder cattle. The assets under management is 7.25 million US dollars. Average daily dollar volume is 484,000 US dollars. So this is not like some super liquid product, meaning this is more for intermediate and longer term holding, not for day trading for sure. This is really interesting. While we are on the topic of animals, you have probably noticed that in this financial field there's many animal terms, and we will now go through them. Everyone have heard about the bulls. Okay, they expect the market to rise. The reason why bulls are called bulls is because when a bull attacks, it launches its horn upwards. You can see it when it attacks, the person annoying the bull, in the bull arena. It launches its horn upwards, and that's why it's called bulls in the stock market are called bulls. Profiting this way is also called going long. Bears, they expect the market to fall, and profiting this way is also called going short. The reason why bears are called bears, that when a bear attacks, it will raise its hands and hit downwards. Okay, so that's why bears in the stock market are called, well, it's not only stock market, but in the financial market are called bears. Chickens, they are afraid to do anything, and there's many chickens. You can easily find yourself morph into a chicken if, say, you put on a position, then you get out of that position, and then you find it very difficult to get back in because you got slightly burnt. Now everyone has experienced being a chicken. Pigs, that's those who are too greedy to lock in their profits, and this is a very common problem. A pig's issue I had myself. I invested in a stock called Nobilis Healthcare a few years back, and I had in a few months 80% profit. But instead of closing out that profit, I wanted more. And then the stock started to pull back. You know, people were taking profits. But I was too greedy. And I didn't close my position until I was sitting with a 50% gain. Meaning I went from an 80% gain to a 50% because I was a pig. Lame ducks. Now we are getting into the animal terms that are not that frequently used, but they are still there. The lame ducks can't keep up with the market. There are many lame ducks. Sheep, they follow the herd to glory and doom, and I think that sheep are the most numerous. Something you will see in the market is that the market is almost like autistic. It usually finds like one idea that it sticks to. Like at this point in time, the market is obsessing completely about the virus. That's the only factor seemingly that matters. In other times, not going that far back, the market was crazy about the Fed all the time, or it was all about the trade war, or it was all about elections. I mean, the market is it has a very simplistic hive mind. Very simplistic, very like single factor approach, which is not the reality. Reality is always super complicated, many factors impacting at the same time. Hence, the big sell-off we saw this year was not simply because of the virus. There were many factors. It could very well be that the virus was the catalyst. However, the velocity of the move was determined by all the factors together. Ostriches, they failed to react appropriately to threats. Peacocks lie about their market prowess, and there certainly are many peacocks. Wolves unscrupulously seek personal profit. I mean, you have probably heard about the Wolf of Wall Street. And whales are big investors that make moves. Yeah, let's quickly look at the S&P 500 just to get the pulse on the market. Now let's get it big. We are looking at daily moving averages. Yeah, today we are again testing the green 50-day moving average. Resistance, fail. Will we succeed today? If we do get to break above it, that would improve the case for the bulls. But the bears might get a bit feisty if we do see a break. One of the major benefits of getting into commodities like this livestock product is that as we saw with the correlation with S&P 500, you didn't have that typical correlation, and that is very beneficial. And the great thing about commodities is that they are real. I mean, hogs and cattle, that's something that humans have traded for thousands of years. So there's something profound and deep about getting into commodities vis-a-vis just trading some stock in a company that a company that could disappear any moment, that doesn't have that longevity, these threads that go deep back into human history. Yeah, whatever you do, of course, you want to let the trend be your friend.